Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel. Several subscribers asked me to analyze Salesforce stock to see if it's a great stock for the long term. Salesforce is the largest cloud-based customer relationship management CRM company in the world. It's also one of the largest software as a service SaaS companies in the world. Salesforce stock has done very well in the past 5 years. For example, Salesforce stock increased 246.63%, while the S&P 500 index increased 111.17% in the past 5 years. Of course, past performance does not guarantee future results. So in this video, I'm going to analyze Salesforce to see if it's a great stock for the long term. Personally, I want to see whether Salesforce will become a multi-bagger stock over the next 5 years. I will talk about these topics in this video. How Salesforce earns its revenues, Salesforce long-term growth prospects, Salesforce competition and risks. What is Salesforce intrinsic value per share? Will I be buying Salesforce stock? If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become our VIP patron. You'll be able to follow all the stocks I'm buying for the long term, watch our exclusive investing weekly videos, and download the latest intrinsic value calculators so you know when a stock is currently overvalued, fairly valued, or undervalued. The link is in the video description. Take a look. Let's start. So how does Salesforce earn its revenues? And what is Salesforce's business model? I mentioned this earlier. Salesforce is the largest cloud-based CRM company in the world. Salesforce is a subscription-based software as a service SaaS business that specializes in customer relationship management, digital marketing, sales, commerce, sales support, customer support, data analytics, business processes, and applications that help businesses connect with their customers so businesses can focus on growing their sales and connecting with their customers. Salesforce cloud-based CRM platform can be used on any devices, including our computers, smartphones, and tablets. All these CRM applications are integrated within Salesforce end-to-end customer 360 platform that can be customized for each business and each industry. So businesses can manage their sales, marketing, commerce, data analytics, and customer management processes within one platform. This is very similar to Adobe's Creative Cloud that integrates all of Adobe's creative apps into one cloud platform. In my opinion, I believe this customer 360 platform gives Salesforce a huge competitive advantage because Salesforce customers will be much more sticky instead of switching to other competing CRM platforms. As far as I know, it's very easy for most businesses to use Salesforce CRM platform to manage their sales leads, sales processes, and customer relationships. Traditionally, most companies need to develop their own CRM applications. Now they can pay a subscription fee to use Salesforce CRM platform instead. For example, if you want to use Salesforce Sales Cloud here, you will pay $25 to $300 for each user per month, billed annually. How much you pay to Salesforce depends on which cloud services and features you choose. Salesforce earns most of its revenues from subscription-based services. For example, in the recent Q2 fiscal 2022 quarter, 93% of Salesforce total revenue came from subscription from sales, service, platform, and other marketing and commerce businesses. If you look at Morningstar here, you can see Salesforce had very consistent revenue and operating income growth in the past 3 years. Salesforce also had very consistent operating cash flow and free cash flow growth every year in the past 2 years. This shows Salesforce has a very stable and growing subscription-based CRM business. In terms of profitability, if you look at Salesforce's most recent Q2 GAAP operating margin here, you can see it's very low at 5.2%, but its non-GAAP operating margin is much higher at 20.4%. The main reason is that Salesforce has a lot of amortization and stock-based expenses that are non-cash items. This means Salesforce's non-GAAP operating margin is actually a much better representation of how profitable its business is. This is also why Salesforce operating cash flow and free cash flow are much higher than its reported operating income. In any type of business, having a positive cash flow, especially a positive free cash flow, is most important. Let's talk about Salesforce long-term growth prospects, so we will know whether Salesforce will become a multi-bagger stock over the next 5 years. In the recent Q2 fiscal 2022 quarter, management raised Salesforce full-year guidance. According to the Q2 earnings slide here, Salesforce fiscal 2022 full-year revenue is expected to grow 23% to 24% year over year. Full-year operating cash flow is expected to grow 14% to 15% year over year. Salesforce CEO and co-founder Mark Benioff said this in the recent Q2 earnings call. For fiscal year 2022, we're raising again our guide to 26.3 billion, which is now at the high end of our range. It's a raise of 300 million, and it's going to represent about 24% projected growth year over year, and just really reflects, I think, how well the company is doing in its core, not just through the Slack acquisition, but you can see organically, especially when you look at the numbers over the last 5 quarters. And we're raising our operating margin to 18.5%, up 80 basis points year over year. Then he said, so we're really quite confident and remain on our path to generate 50 billion in revenue by fiscal year 2026, which doesn't seem very far away from right now. As of now, Salesforce trailing 12 months of revenue is 23.54 billion. This means Salesforce is expected to double its revenue to 50 billion by the fiscal year 2026, which is about 4 years from the current fiscal year 2022. I want to show you this remaining performance obligation chart here. It shows Salesforce future revenue under contract that has not been recognized yet. If you want to know Salesforce future revenue growth, we should look at whether Salesforce remaining performance obligation is growing each quarter, which is one of the most important metrics. If you look at Salesforce remaining performance obligation chart here, you can see it has been growing steadily almost every quarter. This is a good indication that shows Salesforce revenue should continue to grow over the next 12 months or longer. Also, according to the recent Q2 earnings release, management expects Q3's current remaining performance obligation will grow approximately 22% year over year. In terms of international expansion, Salesforce is currently earning 90% of its total revenue from its Americas and European markets. Management said Salesforce is expanding across all its international markets, not just the US market. Management said this in the recent Q2 earnings call. The US consistently growing 20% plus in revenue, EME 32% this quarter, APAC 26%. So we're growing across the board, and growth internationally is not coming at the expense of growth in the US, and that's why we're posting these really strong numbers. Obviously, it's not easy to predict whether Salesforce will continue to grow its revenue at the current 20% plus growth rate each year over the next 5 years. Salesforce CEO and co-founder Mark Benioff is confident that his company can double its revenue to 50 billion by fiscal 2026, which is about 4 years from the current fiscal year 2022. This is based on my personal experience. I have been working in the banking industry for more than 10 years. I've noticed many financial institutions' sales teams use Salesforce to manage their sales leads, sales support, and customer relationships. Personally, I believe one of Salesforce's biggest competitive advantage is how easy it is to integrate Salesforce CRM platform into many sales organizations' sales processes, and how easy it is to use it. For example, you can access Salesforce CRM platform online using a web browser on your computer, your smartphone, or your tablet, without installing any software. Now let's talk about the risk. Salesforce's first main risk is obviously increasing competition with other competitors, including Microsoft, Oracle, SAP, and Adobe. All these competitors have sales, marketing, data analytics, and digital commerce applications that compete with Salesforce CRM platform. If you look at this article here, you can see all these applications such as Microsoft Dynamics 365, SugarCell, Oracle CX Cloud, SAP, and Sage CRM that compete with Salesforce CRM platform. But when it comes to CRM overall market share, Salesforce is much more ahead of competitors. For example, according to IDC and this article here, Salesforce CRM market share have been growing very steadily in the past 5 years. Salesforce CRM market share was 19% in 2020. This is the most recent CRM market share I can find on the internet. In comparison, Oracle and SAP have been losing market shares in the same period. Microsoft and Adobe's competing platforms have been gaining market shares in the past 5 years. But Salesforce is still far ahead of competitors. Here's an important part that shows Salesforce is retaining approximately 92% of its customers. Management said this in the recent Q2 earnings call. We remain pleased with the progress on attrition, with revenue attrition in Q2 between 8% and 8.5%, an improvement from last quarter's 9% to 9.5%. I believe Salesforce's second main risk is decelerating revenue growth in future quarters as the company grows larger. As of now, Salesforce's current market cap is at 252 billion at the time of making this video. Salesforce's total revenue grew 23% year over year in the most recent Q2 quarter. Management is expecting Salesforce's total revenue will grow approximately 23% and 24% year over year in the full fiscal year 2022. I mentioned this earlier, Salesforce management is aiming to double Salesforce revenue to $50 billion by fiscal 2026. In my opinion, Salesforce stock price is already priced in its current 20% plus revenue growth rate each quarter. If Salesforce revenue growth rate decelerates, then we can expect Salesforce stock price to have corrections in the short term. Let's talk about Salesforce fair intrinsic value per share, because I believe it's important not to overpay a stock. First, I define Salesforce intrinsic value as its future free cash flow discounted to the present day. I always use this intrinsic value calculator to estimate a stock's fair intrinsic value per share, so I will know whether the stock is currently overvalued, fairly valued, or undervalued. The market is not always efficient. This means we can often find gray stocks with outstanding businesses that are undervalued. These are the key assumptions. We're using a discount rate of 7.1%. This is the cost of equity calculated by Finbox.com. I expect Salesforce free cash flow should grow between 15% and 25% each year over the next 5 years. To calculate the terminal value, we're using both the perpetual growth model and the exit multiple model here. Then we take the average of both models to calculate the terminal value at the end of year 5. Let's go over these 3 case scenarios: the worst case, the normal case, and the best case scenarios. Under the worst case scenario, we're using a free cash flow compound annual growth rate CAGR of 15%. If we estimate Salesforce free cash flow over the next 5 years and discount this free cash flow to the present day, Salesforce intrinsic value should be around $209.11 billion for the whole company, or around $213.59 per share. This is represented by the red line here. Under the normal case scenario, we are using a free cash flow CAGR of 20%. If we estimate Salesforce free cash flow over the next 5 years and discount this free cash flow to the present day, Salesforce intrinsic value should be around $255.56 billion for the whole company, or around $261.04 per share. This is represented by the solid line here. Under the best case scenario, we're using a free cash flow CAGR of 25%. If we estimate Salesforce free cash flow over the next 5 years and discount this free cash flow to the present day, Salesforce intrinsic value should be around $310.16 billion for the whole company, or around $316.82 per share. Personally, under the normal case scenario, I believe Salesforce's current fair intrinsic value is around $255.56 billion for the whole company, or around $261.04 per share. This means Salesforce stock is likely fairly valued now or slightly undervalued at the time of making this video. So will I be buying Salesforce stock? Yes, I will be buying Salesforce stock because I like Salesforce subscription-based CRM business, and I also like its market dominance in the CRM market. I actually made a mistake selling my Salesforce shares this year. I am waiting for Salesforce to drop further before buying back the stock again, because I want to buy it when there's a better margin of safety, meaning the stock price is well below its fair intrinsic value per share. Personally, under the normal case scenario, I believe Salesforce fair intrinsic value is around $255.56 billion for the whole company, or around $261 per share. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. You will need to do your own research and do your extra due diligence first before investing in anything. If you like this video, smash the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and investing videos every week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become our VIP patron. You'll be able to follow all the stocks I'm buying for the long term, watch our exclusive investing weekly videos, and download the latest intrinsic value calculators, so you know when a stock is currently overvalued, fairly valued, or undervalued. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.